My name is Casey Arrest, and I am the Executive Director of the Center for Affordable Housing Finance in Africa. We are a think tank that promotes investment in affordable housing. I'm sure you all know that because this is a group of friends here. And we are also the Secretariat to the African Union for Housing Finance, of whom Kahinda Ogundimu, who is here with me, is the chairperson. And many of you also know Tandiwe Dlamini, who is hiding. There she is to say hello to everybody. We are delighted to have you here for this inaugural session of the AUHF Academy, and we'll get to that in a little bit. And then we have a panel here whom I'll also introduce just now. Um, but welcome everybody. Please put your name and your organization in the chat and any questions that you happen to have. This is being recorded and it will be available on our AUHF YouTube channel, which in fact is a brilliant resource if you haven't discovered it yet. All of the recordings we do, we put there and you can access them. So I'm going to share my screen and then I'm going to hand over to my chairman. And let me put this on. There we go. Continue to share. There we go. How's that? Can everybody see my screen?
Yes, we can.
Great. And let me introduce you all to the chairman of the African Union for Housing Finance, Mr. Kahinde Ogundimu, who is the CEO of the Nigeria Mortgage Refinance Corporation. Chair, please, over to you.
Thank you, Casey. Distinguished guests, industry leaders, policymakers, development partners, esteemed colleagues from Africa and beyond, good day and welcome. It is my great pleasure to welcome you to today's webinar titled Current Issues in Africa's Housing Investment Landscape. Your presence reflects a shared recognition that affordable housing is not only a social necessity, but also a critical pillar for economic growth, financial stability, and inclusive development across the continent. Africa has one of the largest housing deficits in the world. Rapid urbanization, population growth, and rising construction costs have widened the gap between housing demand and supply. Millions of African families continue to live in inadequate housing conditions, while access to long-term housing finance remain limited for most households. However, alongside these challenges lies a significant opportunity. The affordable housing sector in Africa represents one of the most compelling investment frontiers globally. The scale of demand, the demographic momentum, and the growing recognition by governments and financial institutions of the need for sustainable housing solutions are creating a new investment landscape, one that requires innovation, partnership, and long-term commitment. Yet investors and developers must navigate a number of structural issues, including limited availability of long-term local currency funding, high construction and material building costs, land titling and regulatory constraints, underdeveloped mortgage markets, currency and macroeconomic risks that affect investment returns. Addressing these issues requires coordinated action across multiple stakeholders: government, development finance institutions, private investors, housing developers, mortgage lenders, and capital market participants. Encouragingly, we are seeing important progress across the continent. New financing modules are emerging. Partnership between public and private sectors are deepening. Innovative building technologies are beginning to reduce construction costs. Capital markets are gradually being mobilized to support housing finance. and institutions dedicated to mortgage liquidity and housing finance are helping to extend the maturity of housing loans. Today's webinar brings together experts and practitioners who are working at the forefront of these developments. Our discussion will explore key themes shaping the housing investment landscape in Africa, including state of investment in affordable housing in Africa, opportunities for local institutional investors, housing microfinance, and opportunities for investment in Francophone Africa. Most importantly, this conversation is about solutions. Africa's housing challenge is significant, but it is solvable. With the right policies, financing structures, and partnership, we can unlock large-scale investments that deliver both financial returns and transformative social impact. I encourage all participants to engage actively in the discussions, share insights from respective markets, and challenge us to think creatively about how we can accelerate progress. Let me also use this opportunity to briefly talk about the African Union for Housing Finance Academy. It is a year-long executive education and capacity building program designed for professionals working in Africa's affordable housing sector. The program blends online and in-person learning formats, drawing directly on the expertise within the AUHF membership and selected academic and industry partners. Anyone who attends 10 or more sessions in a year will be given a certificate of attendance. However, because we are starting late in 2026, anyone who attends 8 or more sessions will also qualify for a certificate. The study tour of India also qualifies in this regard. We're also working diligently to get the Academy accredited. I'm sure Keisha may have 1 or 2 things to say about this later in the program. In conclusion, I want to thank our speakers and organizers for bringing together this timely and important conversation. Your expertise and commitment are essential as we work collectively to expand access to safe, decent, and affordable housing for millions of Africans. Thank you once again for joining us, and I wish everyone a productive and insightful webinar. Thank you.
Hinda, thank you so much. Thank you for that really helpful introduction, which I think sets the scene so well. It's something that we're all grappling with, and I think what you said resonated with everybody in this room. The AUHF Academy is something that we're really excited about. So much of what we've done as an organization, I mean, we do webinars all the time, but they've been almost like ad hoc, I guess, and you attend them or you don't. And we wanted to really build up this community of practice that we actually are, and to create a more common participation and recognition. We hope that you will encourage everyone to join. It's explicitly targeted at AUHF members, but it's open to the public. We would encourage you to become a member just because you've seen how great the work is that we do, and able to get a sense of the kind of exchange that's happening. Some of the lectures or presentations will be given by AUHF members, some by members of the wider community who are not yet members of the AUHF, and we're always encouraging everyone to join our union. There is a full pamphlet, and I think Tandiwe might be able to put the link to that in the chat so you could review that. And then in order to sign up, there you can email Tandiwe, and there's a specific online registration form to fill in to sign up for it. So moving on now to today's webinar, and what we wanted to do was really create a point of conversation just to give all of you a sense of the breadth of issues that we're going to be discussing over the course of very, very many different kinds of sessions, webinars, conferences, study tours, as Kahinda said, and so on, reading groups, we hope in time. And we really want to cover the breadth of housing finance issues and create a space for all of us to talk about this together. As you saw in the advertisement for this particular webinar, looking at the current issues in our affordable housing landscape, times are shifting and they're tense, right? So we've got lots of interest in the kind of activity that's happening on this continent, but there's a diversion to other things that are happening for a whole range of reasons in other parts of the world. The prices that we're working with on this continent are profoundly affected by the conflict that's happening right now in the Middle East and in the Ukraine. And all of the math is changing as we're trying to drive and deliver affordable housing. Um, and each of us are having to operate in this environment and figure out what we do. And in fact, a really important thing to consider as we collectively participate in these discussions is that we each of us depend on everybody else in order for the thing that we do to make a difference. Everyone needs to play their part. And so the conversation that we have together with one another, even here, matters to where we go further. So, how do we respond to the current context? Well, we've now got four speakers here today, and I've asked each of them to consider one question. So, we're going to spend the next 40 minutes where each of our speakers will think 10 minutes each or so about the particular question that we've asked. And then from there, we will carry on and have a discussion in plenary with the full group of colleagues. So I'm going to take note of your questions. Please record them in the chat, and then I will moderate the discussion after the presentations. Um, we have with us Dr. Mohammed Gambo, and many of you, I'm sure, are familiar with Dr. Gambo. He is the Manager of Policy Research and Partnerships at Shelter Afrique Development Bank. We're very happy to have you with us, sir. After Dr. Gambo, we will have Shruti Shah, and she is the Group Head of Governance, Risk, and Compliance at Zamara Pension Fund Administrators based in Kenya. We've recently done some work with Zamara, and we're really excited to hear about their interest in affordable housing. And so we invited Shruti to come and comment. Then we have Bezant Chongo, with whom I've worked for very many years. We both have a love for housing microfinance and a deep interest in it. Bezant is the CEO of Symbiotics Capacity Building and works with financial services providers globally, actually, but also in this continent, and working on driving the practice of microfinance and housing microfinance in particular. And then we have Christian Agossa, who is the CEO of Plexus Africa and is also a board member of CAHF, of the Center for Affordable Housing Finance in Africa. So he's one of my board members. And he operates from Francophone Africa, based in Benin and Togo, and was also a member of and past board member of the AUHF. So very happy to welcome all of you here today, and I'll hand over. I'm now going to just give a very quick overview of some of the issues that arise from here, and then I'll hand over to you, Dr. Gambo. So just to remind us all, last year in November, CAF and Convergence both launched this report on blended finance for affordable housing in Africa, and we launched it at the AUHF conference, which was held in Nairobi. Make a note of this. The next one's happening in Zambia in November, and we hope you will all be there. The paper's now been published also in French. And the paper is very interesting. It sets out a playbook for how does one engage in driving blended finance transactions on the continent. Annexure 1 is really interesting. And this is what I want to just very quickly focus on. What it does here is it shows the breadth of blended finance transactions that are part of Convergence's database that relates specifically to affordable housing in Africa. Convergence is tracking blended finance transactions in all sectors all over the world, and they have been doing for some time. And the part of their database that is specifically focused on housing in Africa relates to 25 transactions, which is small. And this comprises about $3 billion in total market size. Um, these 25 transactions are about 50% of all affordable housing deals globally. So there's a lot of activity happening on our continent in blended finance comparatively for the world, but investment in affordable housing compared to other sectors is low. We can see that the majority of transactions are in Kenya. We have also a significant number in South Africa, Tanzania, Nigeria, Togo, and some also in Ghana, Senegal, Zambia, um, Egypt, and Cote d'Ivoire. And many of them are specifically relating to the finance side of the affordable housing equation. So, Kihinda's Nigeria Mortgage Refinance Company is one of the cases that's included in the Convergence database. The CRRH, which is the West African Mortgage Liquidity Facility, is also included in their database, and so on. By far, the majority of blended finance transactions relate to concessional capital, which is about, it really is about how investors are trying to reduce the risks. In addition to that, guarantees and risk insurance and then technical assistance are all part of the portfolio of blended finance transactions that are in place. So this shows us there's curiosity and interest in Africa, but there is a real anxiety about risk that needs to be managed within blended finance transactions. Our conversation today is not going to be limited to blended finance, but I think this is a good indication of what the landscape more broadly looks like. So when we then had our meeting, the AUHF meeting, we came up with here in microscopic text the Nairobi Declaration or the Nairobi Statement, pardon me. And perhaps Tandiwe, you can put the URL for this into the chat. But basically, at every one of our AUHF conferences, we issue a statement at the end of the conference where we say what we as a membership, so 70 members across 23 or 4 countries, what we say we will do. And in the context of Nairobi's meeting, we said that we were committed to partnerships and collaboration, to working on local currency solutions, to promoting and engaging in policy advocacy and reform, to infrastructure integration, to data transparency and knowledge sharing. That's something that CAHF spends a lot of time working on as well. And then innovation in financial instruments. And the detail of that is in the actual statement. And then we urged governments and DFIs to also start to play their role. And just to cover quickly, these are issues, Kahinda, that you mentioned in your opening address as well, is we urged governments to actively engage in measures to reduce the cost of capital, to create local mechanisms for managing Forex risk, to create an enabling environment for urban transformation through area-based investment and growth, and to play their regulatory role efficiently and effectively with special attention to enabling investments in affordable housing. And I'm sure you can all appreciate that behind these 4 asks are like pages and pages and hours of argument and discussion and a lot of data to say why we need these things. These are the issues that the AUHF are going to take with them to the Africa Urban Forum, which is happening next month in Nairobi. And we're currently organizing a closed door session between the CEOs of the AUHF and the ministers and mayors of African governments across the continent. And then we will take that further to the World Urban Forum in May. Um, these are the issues that the membership is concerned with, and they are the substance that our AUHF Academy will be addressing as we together grapple with how do we improve the investment environment for affordable housing. So now I'm properly going to stop and I'm going to hand over, Mohammed, to you. Do you want to share any slides? How you're welcome to do so. I'll leave it to you, or you can speak freely.
Thank you very much, Katia. Good afternoon, all from Nairobi. It is a pleasure having part of this webinar session, and I'd like to appreciate the work done by Center for Affordable Housing Finance, Secretariat of the AUHF, and the team generally in organizing this session. It's timely, and Shelter Africa Development Bank, this aligns with the mandate of the institution in terms of partnerships, in terms of institutions working together to provide solutions to the housing finance challenges across Africa. So just an overview in terms of understanding the state of investment in affordable housing in Africa, what's the current scenario, and then of course institutions, DFIs like Shelter Africa Development Bank, where do we come in, and what's the role of other institutions besides DFIs, private sector, governments, to work together to provide hands-on and practical solutions in the housing finance space. So was all aware, of course, the housing deficit across African countries is increasing, it's significant. And of course, it's coupled with persistent financing gap. According to figures, the continent needs investments estimated at more than 1.3 trillion US dollars to plug in the deficit of more than estimated 50 million housing units. So what does it mean, of course, with ever-growing urbanization across African cities? Of course, the supply is not in any way matching the demand. And then, of course, at the other end, there are issues, there are challenges relating to lack of patient capital, which aligns with the nature of housing industry, more especially the nature of the industry that needs to attend to the needs of low and middle income earners. So, of course, at the other hand, also we have a challenge of the mortgage markets are not developed in most African countries. Most African countries, they do have the challenge in terms of mortgage penetration, hovering less than 5% of the GDPs of the respective countries, and then coupled with other issues relating to interest rates, short tenors, and limited liquidity, which constrains end user affordability. But then, of course, that's where the role of DFIs come in. Institutions like Shelter Africa, Development Bank, and other partners in the DFI space, we do have a compelling reason to play a significant role in catalyzing investments in the housing space. And more importantly, the role of the private sector, the role of blended finance, all to catalyze investments that will attend to the needs of the housing market. And then, more importantly, aspects relating to project preparation, advisory, because what we do have in most instances across African countries is the challenge of lack of bankable projects. We do have the need, we do have the deficit, but then these projects in most instances they're not bankable. But then for these projects to be financed by DFIs, small multi-trade development banks, they have to tick the boxes in terms of criteria. So there has to be a kind of a deliberate effort to make these projects bankable. So project preparation is a key component to catalyze investment in the housing space. And then another component to buttress what Kesia highlighted is the rising role of the private sector. Of course, initiatives like PPPs in the housing space, the role of institutional investors such as pension funds, such as sovereign wealth funds, which across African countries, there are growing initiatives. But then the matter is all about how can these engagements be coupled together and also have a kind of a coherent approach towards providing solutions in the housing space. And then on the end, there is the shift towards green and sustainability. This is no more something that we shy away from talking about sustainability and green. The reality is with us. In fact, just last week here in Nairobi, we had devastating floods, which led to loss of lives. And what does this mean? Of course, is changing rainfall patterns, uneven climate patterns. So all this affects how the industry should approach housing delivery. Green sustainability, it's no more a choice. It has to be at the forefront of initiatives. But then how can we go about it? How can we combine affordability with green? How can we be able to convince developers in the industry that, of course, sustainability is not only the aspect of the initial investments required, but look at it in terms of the long-term operation and maintenance. All these are emerging initiatives in the housing space. And then, of course, moving into what role do institutions like Shelter Africa play as a development bank and also as a DFI to plug in the gaps and catalyze investments in the housing space. First and foremost, of course, providing long-term liquidity, both at the demand and supply sides, in terms of mortgage financing to financial institutions and also financing to large-scale developers. And then, of course, strengthening institutional capacity. This is key because as far as the financing is there, but the requisite capabilities, the skills, and the requisite ability to deliver the housing to plug in the gap. If it's not there, then there is a problem. Most especially if we look at it from the municipalities, from the secondary cities, from the local governments across Africa, that's a challenge. In fact, this speaks to an initiative that Shelter Africa Development Bank is partnering with the African Development Bank, the Urban Development Unit. We're concluding a municipal toolkit, which is planned to be showcased at the upcoming Africa Urban Forum here in Nairobi in the coming weeks. The whole idea of this toolkit is to see how can municipalities and local governments across Africa have a kind of a coherent framework, a guideline, a blueprint on how they can engage with their own partners and how they can catalyze investments to deliver their housing, urban development, and infrastructure needs. And also, not only that, how can they be able to have effective domestic resource mobilization strategies that will enable them to have the requisite financing to deliver their infrastructure needs. So I look forward to having our partners here at that session at the Africa Urban Forum, so as to see how our municipalities can be equipped with requisite skills. So just talk to institutional capacities. And then, of course, the other component is policy and regulatory reforms. That's where the ease of doing business comes handy. And for Shelter Africa, of course, we do have an advantage of having African countries as our shareholders. So we do have that touch point, we do have that relationship, which gives us an edge to engage and to influence policy engagements to enhance investments in the housing space. And then, of course, aspects relating to understanding the ecosystem. There is a toolkit that Shelter Africa developed, the viral toolkit over the past 1 year. Viral is an acronym for V, vision, I, institutions, R, regulations, A, actors, L, local initiatives. So the whole idea of the viral toolkit is a 360 diagnostic tool in terms of a rapid assessment of the housing market, just like the way we do have a country partnership framework at the World Bank or the African Development Bank. So this is something similar, but tailored to the housing space. So it's a rapid assessment tool to understand the needs of countries and also to identify investment opportunities, both at advisory, project preparation, and core investment initiatives, because we want to move from the narrative of having partnership frameworks that only talks to the policy, but also is action-oriented. And then aligned to that, of course, the institution has made efforts and strides in terms of green sustainability. We do have a partnership with IFC, EDGE, and we have incorporated the EDGE platform into the investment criteria of our portfolio. And we have projects across African countries. But of course, more needs to be done. And this will only be achieved through effective partnerships. So let me stop here for now. But at the end of it, what we're trying to say is that partnership is key. And as we head towards SDG 2030 in the next 3-4 years, partnership is a new competition. And then, of course, working silos in the industry would not in any way deliver the intended results. We have to partner, we have to collaborate. That's the only way we can be able to achieve the set objectives in the housing finance space in Africa. Let me stop here. Thank you.
Mohammed, thank you very much. I take note of one of the very first things you said was we need patient capital. We need patience, but that's very difficult when you're in an environment where everybody is screaming because it's an urgent crisis, right? And we've got this tension that we're managing. I think that the work that you're doing with municipalities, I am so excited to see that toolkit because that's a big issue, is the capacity of municipalities, and then indeed also the capacity of the players. Investors can make investments if there is somebody who has the capacity to receive that investment. So we're working on many, many fronts, and it's great to hear the work that Shelter Afrique Development Bank is doing in that space. Shruti, can I come across to you now and to hear from you? What would you say are the opportunities for local institutional investors? As I mentioned in the beginning, I'm so interested and excited about Zamara's interest in housing. For me, that seems obvious, but it's not obvious to local institutional investors. So how do you make the case?
Thank you. Thank you, Cassia. Thank you, Mohammed. I think you've set the scene really well. I'm going to try and share my screen. So I think, Mohammed, what you're saying is absolutely right? Like we can't be working in silos. We all need to work together. And some of the work that Zamara has done with Cassia, we've done a project with the UNDP, is more around like how can we where are the gaps, right? And how can we fill those gaps? And I think we're all trying to figure out filling these gaps, but how can we work better together and more efficiently as well? So when I was looking at the question that Cassia posed at me, I started thinking about, okay, so what is an institutional investor? Obviously, we work in the pension space, but you've got insurance companies, sovereign wealth funds, asset managers, DFIs, and foundations as well. And these seem aligned. Cassia, you're talking about how there's all these, for a lot of investors, there's so many different needs that everyone's trying to balance. So with these investors, especially long-term social security fund type investors, you're managing long-term money, right? Which could very nicely fit into long-term assets like housing. And they could also tick other boxes. Mohammed, you've talked about the whole impact, and with ESG being such a buzzword and theme at the moment, this would also nicely fit in there. From the various pieces of work that we've done as Zamara, there's two areas we feel that institutional investors could come in, on the demand side. So how do we help more people afford to buy? Is it through various options? We've got NMRC represented here. There's a lot of work around rent-to-own models. We're going to be talking about you. Okay, the rent-to-own model. We're going to be talking about microfinance as well. Some of the work we've done is around mortgage insurance, or at least the mortgage deposit insurances as well. So how can we make it, how can we help people with the the financing part of it as well? At the same time, we've also seen through some of our studies that there have been gaps on the supply side. So there's a disconnect on the demand side, but the supply side as well, right? Often the houses aren't where they should be in terms of location, the types, and even in terms of the affordability. There's a real disconnect with what people can afford. When we look at average incomes, average savings, average pension savings as well, there's definitely a disconnect. So we really want to delve deeper to see what can we create, or what can we all create together to try and fill those gaps, right? Through this, I was looking at some of the success stories. Singapore, I think we're all in this region talking about Singapore in so many different fora. And Singapore seems to have got, some things very right, and somehow they've used their pension ecosystem and seen how they could channel that to to help people buy houses, but they've also worked on the supply side, right? Singapore is a success story, but I think, for us here in Africa, I don't think we can copy and paste that directly. But I think the things that have worked in Singapore is that they've worked together, right? So you had your long-term savings through the CPF, you had the supply side fixed through the HDB, and then the governance part of it, right? Which is why it's really worked. So can we at least try and emulate parts of that model? REITs are also a fairly hot topic. So again, is there space for that to come in, and what role could that play in this sector as well? Why could affordable housing work for institutional investors? I've talked about the long-term stable returns. Long pension schemes are long-term arrangements. There are inflation hedges as well. So over the longer time, ESG and impact alignment. We all are going to be reporting more around ESG over the next few years. So this could fit in really nicely. And this is a huge opportunity that is being missed, right? And so it is, in my opinion, sitting at the intersection of returns, resilience, and impact as well. Obviously, there are challenges and there are things that have gone wrong. There is high risk. The infrastructure costs are high. Mortgage penetration is, still pretty low. And the types of products available don't seem to speak to the masses. Currency is an issue, especially when, the butterfly effect affects us so much. So the Middle East war will affect us, exponentially, and so will the next crisis as well. So how do we deal with that? And some of the, areas that we do need to really try and clean up is around governance. A lot of the, work that we've done with other pension schemes and property, there have been governance issues in terms of, where there's been misuse of funds. You don't often get the best quality. It's not been very efficient. And then the illiquidity part of it, right? And so often we've got some pension schemes that get stuck with, massive properties, are not able to sell them, not able to maintain them as well. So how do you deal with some of these issues? Land is also a very emotive issue in this part of the world. There are also, a lot of issues around policy and regulatory uncertainty. And I mean, the biggest thing as well is how do you define affordable housing, right? I mean, is there something available for everyone, and how do we deal with that part? But it's still, I think we do need to come up with solutions. Mohammed, going back to what you said, we do need to work together to see how can we bring the various players together, because this is an incredible opportunity to make an impact. That's my presentation. Back to you, Kathia.
That's great. Thank you so much, Shruti. Just on that very last point that you made there, I know that Zamara participates in forums of institutional investors and specifically the pension industry, but also within Kenya, like the REITs market, but also regionally. How do you say elevate housing? How does one do that in those forums?
I guess it's a lot about awareness as well. I mean, just talking about REITs, there are REITs that are being launched. We've seen success in them. I mean, it's taken a while. The runway's been long, but it's building awareness and comfort around it. I think so talking about it more. I think it's and having open, transparent discussions.
Yeah, I mean, that is a whole other set of conversations that we could have. And I want to make this point too, because in listening to Mohammed, and Mohammed, you were talking about all these different initiatives that SHAFDB is involved with. And Shruti, you as well. Of course, data is a big thing. We need the data to be able to make the argument. And you make the point on one of your slides that honest reflection builds credibility. And it really does. So that is something that we all have to come together to share. We have a program, as many of you know, which we're calling the Open Access Initiative, where we're trying to share data in a way that helps everyone say, yeah, we're not alone here. We're doing this together. We have similar experiences. And then to be able to argue that to the regulators and the policymakers. But maybe we'll come back to that a little bit later as well, as how do we practically do that, given that certainly all you guys have day jobs, right? So we focus on data all the time, but you're busy trying to actually make the investments.
Yeah.
Let me, do you want to comment on that? Sorry, I don't want to cut you
No,
off.
I was just going to say, and data and evidence is so powerful, bringing it all together because we're all doing it in our own little ways. But if we brought it all together, you know, there's a lot that it could be very powerful.
Yeah. There's one comment I've just noticed on the chat I'm going to bring in for you, but before I get to you, Bazant, and that is, it was Debbie Erb has said that normally you would lead the conversation about housing as an investment target by saying that there are these attractive returns, but of course returns are fairly modest. Is that something that your triangle speaks to, Shruti? Your intersection, I drew it as a triangle, pardon me. Returns, impact, resilience, hey?
I mean, I think returns are, it's difficult to match some of the, returns that, for instance, in Kenya, that government bonds have given us in the last few years, right? But these are longer term. But I think that's where the impact element could also come in. And I think there are opportunities for returns, but sometimes that's where the stronger governance around it needs to be managed.
Yeah, exactly. And that was, in fact, Debbie's second point, where she says, I think we also need a clear argument against risk perception, which then comes back to the data and so on. Okay, thank you very much. Bazant, I'm very happy to have you here and that we're bringing housing microfinance into this discussion because oftentimes it's the sorry cousin. And you've been working very hard for a good long time to promote housing microfinance as part of the overall picture. So maybe you can tell us a little bit about the work you do and the issues that you are facing as well.
Thank you, Kesha. Really glad to be part of this discussion this afternoon, and possibly to contextualize a lot of what I'll be presenting. Just a few words about symbiotics. Kesha did a good job of an introduction earlier on. Just to say that I think, as Mohammed had said, when you talk of affordable housing, capital is always a challenge. So, as an impact investor working in microfinance space, we do mobilize capital from DFIs, from the private sector, predominantly to place it where it's going to have the most impact. So over the last 20 years of our existence as a Symbiotics Group, last year we marked an important milestone of actually placing $10 billion into the market. We've worked across 97 countries in what we call the emerging or frontier markets. This is Latin America, Africa, Asia, Eastern Europe. We've worked with over 600 financial institutions. So we only place debt financing. We do not do equity. And predominantly, it focuses on access to finance for improved livelihoods, where the institutions that we work with are financing micro, small, and medium enterprises. With regards to then the impact, we are looking to see how we can improve access to livelihoods through food security, job creation, and increasingly of late also responding to climate change and access to clean energy. And cross-cutting with that is the importance of housing. So housing has increasingly become an important area for symbiotics, and this cannot be better represented by the fact that October last year, we partnered with Habitat for Humanity to actually be the manager for the Microbuild 2 Fund, which aims to place $300 million or so into the affordable housing finance space through the different financial institutions and intermediaries that we work with. So that's really the background in terms of symbiotics where we are coming from. More specifically around then affordable housing finance. Housing microfinance really sits at the interface of affordable housing finance and microfinance. So for those of you who might be coming from the microfinance space, which is where Symbiotics has its specialization, is that we are able to provide capital to low-income households who would otherwise not be able to access the capital for various reasons, but core of this, the fact that their sources of income or their levels of income are significantly low. They are considered unbankable. They're not able to provide collateral. These are the same challenges that the traditional banking sector faces that microfinance has been able to address through different innovations by looking at collateral substitutes, for instance, being able to finance small amounts at significantly higher cost, but still be able to do it sustainably. We transfer the same approaches and concepts to housing microfinance. And I think a discussion about housing microfinance cannot really be meaningful without trying to define it. And more importantly, qualifying that when you talk of housing microfinance in the context of affordable housing, we're not talking about micro mortgages. So I am just going to put up a slide which hopefully we'll be able to contextualize a bit more of this discussion. Let me just share my screen. Great. So really when we think of housing microfinance and its relevance to the African context, it's about what it is, what are the elements of housing microfinance really which make it unique in terms of addressing the challenges of affordable housing. I refer to the fact that access to tenure or collateral is a real challenge in affordable housing. And for that reason, mortgages are not really an option for 95% of households in the African context, as Mohammed had already outlined. So in the absence of secured tenure, we tried in housing microfinance, we really borrow from the concepts of micro enterprise lending or microfinance in terms of looking at alternative or collateral substitutes, which allow you to still be able to provide access to capital to low-income earners, individuals who do not have a fixed, reliable income in terms of a salary. Microfinance has been proven to be able to still lend securely to people with informal income. And it's this concept around how do you address the lack of collateral or bankable collateral that then you can still be able to provide capital for housing purposes. So these are the concepts from really micro enterprise lending that are transferred to the housing microfinance context, then allowing us to provide low value capital for the purpose of housing. So I did mention that housing microfinance is not about micro mortgages. In the definition here, I love from Daphne and Ferguson, we describe housing microfinance as that really access to low value loans, which then can be used for buying a piece of land, use the low value loan for improvement of an existing structure, whether it's around making renovations or upgrading a room, changing the ceiling in the house, or actually constructing the actual house itself from scratch. So a big component or use case for housing microfinance is that you're able to build a house incrementally by accessing multiple loans over several years of cycles. And this really then significantly increases the affordability. The affordability challenge around mortgages is quite significant in the context of Africa because of the lower levels of income. So again, housing microfinance really becomes a unique means of bringing the masses into the housing market, because the challenge of affordability is addressed by that you're not trying to access a mortgage or a micro mortgage, but really low value loans that allow you to then to build the house incrementally. So really with housing microfinance, what we're trying to address is challenges to do with tenure, challenges to do with affordability, and from the institutional financial institution perspective, also the challenges to do with long-term capital. Housing microfinance sits in the middle spot of where the capital requirements, when you're coming from a microfinance perspective, might be slightly higher than what it is that you finance for microenterprise lending, because the loan terms are longer, but also at the same time, significantly lower than the capital tenure that you would require for mortgages. So really, housing microfinance sits in that sweet spot of where you're really making it affordable for the masses to enter the housing market, but addressing through innovative means that have been proven in the microfinance context that address the challenges of the lack of collateral and also the affordability challenge. What's worth noting is also that there's been really a body of practice that has developed over the decades around housing microfinance, and how it's important that you really bring different stakeholders, not only from the financial perspective, but increasingly also from the broader social impact narrative, trying to address challenges to do, for instance, with the impact of climate change. So you find that housing microfinance is also playing this significant role to address the need of upgrading the housing circumstances, allowing houses to also really make the change to renewable energy, again, leveraging the concepts of microfinance, but in the housing context. So it's really a time where, housing microfinance is having this significant impact, which is cross-cutting in terms of the impact that we're able to make for communities, but even more so for financial institutions. Housing microfinance can be entered from different perspectives. If you're talking about banks or mortgage companies, housing microfinance becomes an opportunity to really go downstream by downscaling and introducing low-cost housing finance mechanisms, as I said, especially through incremental housing mechanisms or improvements that can be made. From the microfinance sector, housing microfinance also then becomes an opportunity to diversify, because the micro enterprise clients of these institutions also really, once they're able to grow their businesses, the next step, a priority becomes on being able to upgrade their dwelling. So it becomes imperative that the financial institutions do need to have dedicated fit-for-purpose products that actually address the housing finance needs. So the issue of housing microfinance, then you find that it's not necessarily just about providing financing for housing, but ensuring that the products are actually designed to specifically address the unique housing microfinance context for the given community. And this is where then an important element of our work at Symbiotics, through Symbiotics capacity building, is that when with our partners, when we do not only provide the capital, but we also then bring on board the expertise through our technical assistance offering, which the likes of Habitat also do get to put together through that blended finance mechanism like the Microbuild Fund, that to really assist financial institutions to go into affordable housing and housing microfinance, there's a whole body of knowledge and best practice that can be brought on board through technical assistance. And this is an area where we've been working over the last couple of years, growing our practice on technical assistance to support our partners to introduce housing microfinance products. And this, I think, would be a good point to mention that in the collaboration that we are looking to have with AUHF, we will be looking to participate in a series of webinars this year still, where we'll go into a bit more detail with regards to housing microfinance, what the business case is, regardless of where an institution is coming from, whether it's a mortgage company, a bank, a microfinance institution that's looking to diversify, downscale or upscale. What are the opportunities for housing microfinance there? What are the delivery mechanisms, depending on the context that you're in? The challenges, what has worked elsewhere, we'll share quite a number of case studies. And more importantly, the capacity to scale. It's one thing to have a product, be able to run a pilot, but what are the opportunities for scaling a housing microfinance product? And this is then we're going to look at opportunities for partnerships, strategic partnerships that exist in the different ecosystems that allow housing microfinance to work successfully, but more specifically in the African context. So looking forward to the opportunity to share a bit more about our experience in the housing microfinance context, the context of the AUHF webinar series.
Bizan, thank you so much. Your short input right now has led to a number of questions, which I'll come to afterwards, and we'll use those for the course of discussion. But you might want to just take a look in the chat while we carry on. I think what I think is so powerful is if we think that the majority of urban residents, and then one could also include rural, but of urban residents even and peri-urban unable to access mortgage finance. And microfinance creates a really interesting tool to improve housing quality over time to the point where it becomes a mortgageable dwelling. That then it changes, it makes your housing ladder have more stops in it because you've got a wider variety of house values that could then be sold. CAHF collects the data for the cheapest newly built house, and it's usually far out of what people can afford. But a house that's built with housing microfinance might come in at a little bit more affordable than that newly built house. And you start to diversify your housing sector, and you're creating new clients for the mortgage lenders ultimately.
I couldn't agree more. I think one of the challenges we have in Africa is just the lack of affordable housing stock. So housing microfinance really then does bring in housing stock, which then could be mortgageable in the long run, just because of the quality that housing microfinance can assure. I didn't mention the construction technical assistance, which is an important add-on in housing microfinance, because then if the quality of the housing that is built is substandard, that does perform the portfolio long term. So the construction technical assistance that addresses the quality is an important element of housing microfinance too.
Yeah, absolutely. Well, I'm looking forward to your webinar series, and I'm sure everybody else is as well. That'll be a really nice part of the AUHF Academy. I'm going to move on now to our last speaker. Christian Agossah is my board member, as I said. We're very happy to welcome you, Christian. He is the CEO of Plexus Africa. And we've been working with Christian over the last couple months, specifically organizing a conference that will be taking place in Cotonou in Benin, under the theme of blended finance. We expect it will happen sometime, we're hoping in June. So please do take note, and we'll share the information as it becomes more clear. But Christian, if you would like to take the floor now, and please turn on your camera. There you are. Hello. Welcome, sir.
And
Go ahead.
hello, you all. First of all, I apologize for joining this conference later than most of you. And I mean, I have some technical issues here to solve. I had the privilege, and also sometimes it's also a burden to be the last speaker. And I understood that what is expected from me is to tell you about the landscape of investment opportunities in Francophone Africa, especially. Francophone Africa today is roughly 16 countries, and I will focus on the 8 countries I know the best, meaning West Africa Economic and Monetary Union countries, Benin, Burkina, Côte d'Ivoire, Mali, Niger, Senegal, Togo, and Guinea-Bissau. Okay. First of all, I would say that the main driving factors of affordable housing in Africa, all of those factors that you already raised fully apply to those countries in Francophone West Africa or the continent as a whole. And so I won't repeat those points. All the challenges apply to us in West Africa. So I will focus directly on the main investment opportunities, the most promising markets I can identify, the type of investments one can choose. We'll talk about a couple of emerging trends in West African economic and monetary union countries, and also the risk associated with those investments today, according to me. And so I will try to share some conclusion with you. Just to complete about the West African economic monetary union countries, it's important to say that those countries share the same currency, the same banking and financial regulatory framework, and the currency is quite stable, which makes a great difference with a number of other markets in Africa, because the currency risk is totally mitigated. And those countries also have a single financial markets, including a regional mortgage and securitization market. So what are the most promising markets for investment according to me? Basically, I would say it's Côte d'Ivoire, and mainly Abidjan, followed by Dakar in Senegal. Third, in Cotonou in Benin, and fourth, Lomé in Togo. So 4 countries out of 8. As you all know, the remaining 4 have experienced since 2 or 3 years some military coups that creates a difficult investment environment, because those countries are ruled by militaries now. Burkina Faso, Mali, Niger, and those 3 countries are AUHF countries and Guinea-Bissau. So what are the type of investment opportunities we can consider profitably in those 4 countries I was suggesting? First of all, affordable housing is a really, really, really promising segment. Most of the governments have they engage large reforms to make the environment more conducive, more friendly for investments. And we have a middle class, a rising middle class, and more mature developers able to offer more affordable housing units, and with great quality now, especially in Côte d'Ivoire, Senegal, but also in Benin, where the government have managed to produce roughly 10,000 of housing units that are to reach the markets in the coming weeks. The second type of investment we can consider is land investment. This is a segment of investment that is the usual investment support of the middle class in our countries, because most of them are not used to invest in securities. So they all expect to make profit by investing in land. We have particularly known institutional investors in those in these segments. A third investment segment is the mixed residential and commercial building. This is often quite that is experienced a quick development in Côte d'Ivoire, in Senegal, and in Benin. Special because it helps people to optimize their investments and diversify the sources of revenue. A fourth investment segment that I find very, very interesting is the purpose-built student housing segments. And here, the demand is really, really strong. But unfortunately, institutional investors that must be the anchor for investment here are very hesitant to step in. So most of the offer here for students are quite informal today. The fifth investment segment I have identified is the real estate investment sector. We have a couple of that, but they are not really strong. They are still weak, but they usually welcome institutional investor investment in the current existing one. And lastly, I told you about the regional mortgage markets. The regional mortgage market it's quite recent, but it's experiencing a steady growth with institutions like the regional mortgage refinancing facility, who used to issue on a regular basis long-term bonds in these markets. And more recently, securitization. We are experiencing some securitization transaction. And this is, I mean, the return is quite interesting here. But obviously, when we speak of those investment opportunities, we should speak, we must identify the risk associated with them also. But before that, just want to take a couple of minutes to emphasize the emerging trends in these markets. There are three emerging trends that I believe important to share. The first one is the general wave of reforms in all of the countries to secure the land administration and taxing processes, and also the building permit processes. There is a way for digitalization in all of those countries. And for instance, if in Benin, the target today is to deliver a title within 30 days after request, which is quite ambitious, but the possibility that they can realize that is real, because today most of the processes are already done online, which helps to curb some corruption factors all around the value chain. In Côte d'Ivoire, for instance, today, building permit can be digitalized completely. which is also quite helpful. In addition to that, in the region, we have a strong wave of digitalization in banking. And in my view, this cannot this cannot spare the mortgage lending processes. I will add also in the banking sector that there is now a strong interest of large banking group for microfinance institutions. Since, I mean, for the last 3 years, at least 3 or 4 large regional banking group bought microfinance institutions. And we have practically 3 or 4 transactions like that. And regarding the regional capital markets, the bond market is steadily developing. I spoke about CAHF a moment ago, and also the increasing bond issues, I mean, asset-backed securitization issue with housing and commercial real estate assets. So what are the risks? The main one is the political instability risk. As I say, we have out of 8 countries, 4 have experienced military coup in the last 3 years, and this comes with permanent instability, which is not conducive for long-term investments. The like that we need for housing. The second one is transparency. Find that we have a great wave of digitalization, but it doesn't provide answer for everything. And especially we still lack quality data to make sound analytical investment decision in the area and to compare to. So just to conclude, I may say that investment opportunities in West Africa, especially in where countries are large, and that the bulk of those investment opportunities lies in Côte d'Ivoire, Abidjan, Dakar, Senegal, Lomé, and Cotonou, with return usually above 10% per annum and practically without currency risk. So those markets are really attractive for mature market investors. However, I will advise that for those seeking to invest in those markets, that they work with a local partner with a careful checking of the titles. Otherwise, those markets are open to investors. They are friendly markets too. And the issue of GFIs and institutional investors working together is really critical for the development of these markets, as I see them as the main driving factor for the development of some weak links today, especially real estate asset management, blending finance, providing guarantees or technical assistance to de-risk investment for developers is critical, and this may help attract large, a greater number of investors in our markets. Thank you.
Christian, thank you. Thank you very much. I mean, I think that there's so much to think about, and I'm sure that many will be interested in attending the conference in Cotonou when we have a date, and we'll communicate it, because there's lots to discuss. and really interesting developments in terms of especially the digital titling and land administration systems and the building permits, 30-day title in Benin. That's very exciting. Um, and then also the interest in microfinance and by the larger lenders as well, and recognizing that in fact the population is needing a wider array of financial products because of the particular constraints that they're under. There's a question that's come in, and it sort of arises also, Christian, from yours, but I'm from your presentation, but I'm going to give it actually to Shruti because I think it's an interesting question from a Kenyan perspective. And Shruti, this is a question, in fact, from a colleague just down the road from you, from Yitzhak Rabin, who is with the Kenya Property Developers Association. An important question. Where do you see the biggest misalignment between government affordable housing programs and private sector investment expectations? And how can this be practically resolved? Is this something that you can talk to, Shruti?
Wow, it's a difficult question.
Yeah, it is.
I think, I mean, from the study that we did together, Kithia, and also just what we've seen over the last few years, paying this levy into this affordable housing fund, there is the pipeline of projects coming up is not happening fast enough, right? There is definitely a disconnect as well with private sector investment as well, right? So this is the affordable housing programs by the government are all being funded through the levy that we're paying. But I think there is an opportunity there again to bring people around the table. As much as we're paying this levy, how many people have we actually seen, or like how much of it has actually concluded in the right direction? So this is where I think some of the learnings from the Singapore model, bringing everyone together and the stronger governance structures. I think that's possibly one of the areas on the misalignment. I think based on our study, there's also been a disconnect with where a lot of the availability is in terms of housing and where people actually want to live. So that's something that, because here we looked at some interesting maps and graphs of, where the demand is and where the supply is as well. I think one of the other things, and I mean, this is slightly, I guess, off topic and might not directly answer your question, but there is also some cultural issues around housing and, housing finance as well, and how people start investing into housing as well. So, in our study, one of the things we found for a lot of people is that they want to do it incrementally. So people want to buy land and then save up and, put a small structure, then add to it. And that's an issue we've seen in a few countries. So those are some of the areas. But I do think governance is possibly the biggest misalignment.
Yeah. I mean, that was great, and thank you for catching that ball. Because I think it's a very difficult question, and it's one we're all grappling with all the time. It does lead us to maybe go to Bezant and to ask you. There are lots of questions, I'm sure you've seen them in the chat, relating to housing microfinance and how this thing works. And one of the interesting ones from David Thompson Timbo saying, on its own, it's not going to solve the problems of affordable housing. And he raises a number of other things there. I wonder if you want to comment on that, and also on the issue that he raises of the revolving fund. Shruti, you might want to come in on that later to see how it goes, because that's, I think, where the capital that we have to invest so that there's microfinance to extend. Bezant.
Thanks for the question, David. Microfinance alone, it's not a silver bullet. It's just but one of the smaller elements in the solution, and that's not to undermine the contribution it can make. I think the main point we were saying that for the lowest part of the pyramid or the low income community, housing microfinance is a solution for them to enter the house ownership ladder. So it's not, microfinance will not fit all contexts. We are specifically making the case that for Africa, while the income levels are so low, housing microfinance becomes a significant component of the solution, at least to get people into the housing market. You do make the point around affordability, the cost of capital, hence solutions such as a revolving fund. I see them really as part of the extended solution, where we say that, in fact, housing microfinances are so broad as not to just talk about the capital or the loans that can be obtained from a housing microfinance institution, but even community-based initiatives that can be through circles or savings mechanisms that allow people to build that capital at lower cost than borrowing if the interest that would come from a housing microfinance institution through a sort of a revolving fund, depending on the country you're in. We'll be talking about circles, or you'll be talking about stock bills in South Africa. So these are mechanisms of which then people can really get into housing microfinance and are well fitted for their incremental housing. So completely agree that housing microfinance is not the only solution. Leveraging the different technologies, digital money, mobile money, makes it even more affordable and more efficient to look at these different revolving mechanisms. I am aware of quite a number of digital stock bills in the context of South Africa that are geared towards housing specifically. So you're having this combination of different initiatives or innovations. The core point being that we are able to provide low cost capital for housing purposes without the challenges, the typical challenges of collateral and tenure. And affordability is also addressed just because of the size of the loans that we're talking about to enter the housing market. But the mechanisms, revolving funds, and variations of that are definitely part of the housing microfinance solution that we are putting out there.
Thank you. Thank you, Bezant. Shruti, just very quickly, would Zamara be able to invest in a revolving fund for housing microfinance?
I could
It's
say
a
yes.
hypothetical. You're not giving us any advice or any of that stuff. It's just a hypothetical.
I was saying, yeah, I could say yes, and I might lose my job. So I'm not sure I have the authority. So we don't invest directly, but we work with pension schemes, social security funds. We help to build and facilitate as well. But I think, Bezant, what you're saying makes sense, right? Like it's bringing different cogs of the wheel together, and providing end-to-end solutions as well. So, SACCOs, I think, could be a very powerful tool as well. But it's how do we bring all of it together and tie it up together? I guess that's the bigger question.
Yeah, okay, that's cool. Kahinda, is this something that NMRC is thinking about at all? I know that some of the MRCs have been looking at finance, and I know, Christian, that at CRRH you were interested in housing microfinance. But Kahinda, do you want to comment on this?
It's something that we have played with, or thought about, but still has a lot of regulatory challenges to scale through for us to be able to actualize it. So just like any other African country, we have that income limitation of a majority of the population and the informality of those incomes. So housing microfinance is something that will work, but our regulators, maybe from past experiences, are a little reluctant in us getting into that space for now, but we keep pushing.
Thank you. I mean, I hope that Bezant in your seminar series that will be able to, it's about training and capacity building, but it's also about saying, well, what are the issues that we need to pursue? And as CAHF, we will be looking, and the AUHF as well, for instruction coming from your webinar series for how we can start engaging with the regulators on behalf of the industry. So we'd like to do that. Christian, did you want to make a comment about that at all? Is that something you'd like to reflect on briefly?
Microfinance issue.
Yeah.
Yes, I believe it's critical, and what Vincent is doing is absolutely critical, absolutely interesting. I just remember that the time I was working at CAHF, we had a program with the World Bank to extend residency in microfinance institution. I started working with a number of them, like Cofina in Senegal and Côte d'Ivoire, a small cooperative of artisan craftsmanship in Togo also, and I believe that they are still doing it, and so that maybe with KMFC you can consider the issue of getting some refinancing from them on the basis of predefined affordability level. And I also understand that you are working with SACCOs, and given that SACCOs are also shareholders in KMRC, it must be easier for you to find a way to work with KMRC on that basis. I've also noted that someone in the chat was asking if microfinance in Benin already practice housing microfinance. In my knowledge, no. But on the other side, the point is that low income or irregular income household willing to buy a land, because housing for those low income or middle income households is incremental. So they don't go to the microfinance institution to say, I want to buy a land. They will say, I want to please lend me money for this and this and this. And they just go to buy a land with that. And when they finish the reimbursement, the second step of the loan is for building the small space they need to enter the room and so until the have a complete housing unit. So they are probably doing microfinance without, without explicitly recognizing that this is microfinance housing. So it should be up to banks or refinancing facilities to ask them to convert the small loans they are making with a guarantee based on titling, because that is also most of the time what's happening. If the loan goes beyond a year, for instance, they will ask the household to bring a title or any other type of land ownership to guarantee the. So it will be up to the refinancing facilities to ask them to convert those loan backed by titles to explicit mortgages. Someone also asked how we can assess long-term sustainability demand for student housing across various markets in Africa. It's possible, but mainly student housing is still a local issue driven by government intervention. But those who are willing to step in across various markets must define the sustainability tools they want to use, the level of subsidy the request to invest also. And the best way is to have a very clear idea of the percentage level of return you want, and to open the dialogue with the public authorities, the government of the or the universities. But most of the time, the universities don't have the capability to contract. So it will be up to the government to provide with
It's
the
become
financial and non-financial guarantee you need.
it's become such a hot topic in so many countries. Partly the students have good voices, and it's a real issue, but it's sort of now presenting itself much more dramatically than I think it had in the past, and there's a lot to be learned. It's not something that we've explored as CAHF, but we certainly can start to pull together some of the research on that as well. We're not going to manage to answer all of these questions because we've come to the end of our time, but I am very grateful for them because they will in fact help us guide and shape the rest of them, the rest of the sessions. Shruti is going to come back with a session on institutional finance and the research that you did at Zamara. Bezant is going to come back with a webinar series on housing microfinance. We have a number of other ones planned as well. And there's lots, and we don't have time to talk about them all. Mohammed, you started this discussion here. Would you like to have one last word? And then I'm going to give it to you, Kehinde, to say goodbye. Mohammed, go ahead.
Okay. Thank you, Kate. So in terms of conclusion and terms of next steps, no, the way we look at it is that just reflecting on the question that was answered in terms of role of microfinance, other engagement, student accommodation. The reality is that there are lots of initiatives that to be considered successful across African countries. But I think we do have to make to be intentional and make concerted efforts in terms of sharing these best practices. And also, case studies of initiatives have failed. I think those, even if not successful, there is the need to share the experience. For instance, here in Kenya, that's been the ACON student accommodation, which Shelter Africa has been an anchor investor. And then, of course, years back at 2019, 2020, they raised the green bond, which was successful. And then they are scaling up in terms of more innovative initiatives to has to do with students, youth. So all these things are initiatives that I believe can be shared and can be enhanced. The housing microfinance here in Kenya, SACCOs are considered to be a part and parcel of the housing ecosystem. But of course, they have their own challenges from corporate governance and all those issues. At Shelter Africa, of course, we come in to say, how can we be able to enhance and capacitate and support, such initiatives to make them align with best practices. But then I believe we have to be intentional in terms of sharing best practices, in terms of sharing what has worked across other African countries, what we have in Benin in terms of what was highlighted in terms of land reforms, in terms of titling, also like in Rwanda. All these are examples that we need to share what has worked, what hasn't worked, and how can we continuously work together to achieve the set objectives. So I believe, just in conclusion, it's a matter of cooperation, working together, and then more in terms of moving ideas to piloting and project delivery. I think that's the only way we can move and make kind of practical impact in the housing space going forward. Thank you.
Thank you very much, Dr. Gambo. Kehinde, you have the last word.
Thank you very much, Kesia. I just want to say a very big thank you to all the speakers for your insightful and very brilliant submissions. I also want to say a very big thank you to the participants. I think they've asked some very thought-provoking questions that will also guide us in the next series of seminar or webinars that we'll have on the Academy. And I couldn't end without saying a very big thank you to AUHF and CAHF for putting this together. Finally, we look forward to everyone's participation in the next and the subsequent webinars that will be coming up. I think they will be very enriching and then helping capacity building and, more importantly, in stimulating investment opportunities across the continent. So thank you, everyone. Thank you. We stayed a little bit over time, but we thank you for your participation. Thank you.